This is the markets in 2 minutes as of November the 6th, 2025. First, we have the AI bubble. Now, we've been speaking about this for the best part of the year. I do think it's good companies. You are going to see some kind of profit selling, as what we've seen recently, and then you are going to get the dip buyers that bring it back up. I do see this kind of phenomenon to continue for the rest of the year, as you see kind of profit taking and then the dip buyers. What I am concerned about, though, is those regions that are heavily weighted towards AI. Now, we've spoke a lot about diversification, this being in Asia. Now, you've got places like Taiwan that's 50% of the gains have been to one company, TSMC. You've got the Kospi up heavily, driven on AI. You've got the Hang Seng driven on 6 companies. And to a certain extent, the Nikkei as well, driven by kind of the technology boom. Do you want to rethink these areas? Because if there is an AI bubble, obviously it's going to affect the US, but where else is it going to affect heavily as well? And we think Asia's one of these kind of areas where it is going to have a heavy impact. Again, what we've seen this week is selling in crypto and gold. Crypto, from the World Economic Forum, it was stated as a bubble along with AI and debt. So I would be cautious on that. What we got from an economic perspective was the jobs data, and the jobs data actually came in resilient. Again, it's the story that we've been seeing for the last kind of 12, 18 months, is just how resilient the US economy has been. What does this mean? It obviously means more hawkish, means that the bond markets are likely to stay higher for longer. Again, so if you've got money in the money markets or in the debt market, especially if it's in US sovereign debt, kind of short to mid-term, maybe you want to keep it in there. The other kind of aspects that are coming into effect this week are the US shutdown. What's this likely to have on kind of the data as we go in it? We've hit the world's longest US shutdown as of today. How is this likely to impact the data and the results coming out in the forthcoming months? That's something I'd think about in the portfolio. The final concern is the debt. Now, we've seen a lot of companies, particularly the big tech companies, raise kind of issuance by debt. Now, I don't think this is a problem for these companies, the likes of Meta, Amazon, Google. They're not going to go bust by raising 30 billion on the debt market. What I would be concerned about is the smaller tech companies and the overall debt market in kind of less stable companies. So summary is, as we've been saying all year, is to keep an eye on kind of the AI bubble, maybe use this opportunity to take some of the profits, look at putting some into kind of the short end of the debt market, and kind of be nimble if something does happen into a crash.